seems that market fundamentals and earnings data have reclaimed the spotlight this week. Assets are temporarily shifting focus away from the geopolitical tensions that dominated the past fortnight, placing central banks and economic statistics back at the helm. And this shift has brought about some unexpected developments. Apparently, the unsinkable ship of the American economy has sprung a leak. Recent reports have documented a decline in the U.S. business activity, which fell to a 4-month low in April, accompanied by a downturn in consumer demand. This decline in business activity and consumer spending has also led to a slowdown in inflation rates, following the weaker-than-expected performance of the private sector and overall business activity. The month of the U.S. economy being invincible has begun to crumble, impacting the strength of the U.S. dollar. However, today's data on the new orders for durable goods tells a different story. Not only do these figures reflect consumer sentiment, but they also indicate the resilience and potential long-term stability of the economy. And the data for March exceeded expectations, showing a robust increase of 2.6%. The greenback has rallied in response to positive U.S. economic data and currently trading between 105.50 and 105.90 points. And this rebound has helped the dollar recover some of yesterday's losses and suggests it might continue to strengthen in the short term. Demand for safe haven assets and uncertainty around U.S. elections continue to drive the dollar's growth. If these conditions hold, the dollar is expected to remain a strong performer in the forex market. In contrast, other currencies in the basket do not receive the same level of support from the country's economic policies or central banks, and this is especially true for the Japanese yen, which has fallen by 9% since the start of the year. The situation with the yen could stabilize if the U.S. cuts rates or if the Bank of Japan decides to raise them. We'll learn the central bank's decision by the end of this week. In the meantime, as the yen weakens, Japanese authorities are signaling readiness to support the currency. Experts now suggest that Japan might intervene if the yen reaches significant levels, potentially around 160 or even 170 yen against the dollar. April saw a notable shift towards buying the dollar against its major currency counterparts, spurred by a sell-off in the U.S. stock market, and this shift occurred after investors recalibrated their expectations for the Fed Reserve's interest rate policy, resulting in a 2% drop in the SP 500 and an even steeper 4% decline in the Nasdaq. However, the stock market is currently experiencing growth, particularly in the shares of tech giants. This week, the market anticipates quarterly reports from Microsoft, Meta, and Alphabet. Against the backdrop of an artificial intelligence boom, shareholders are expecting positive, if not very positive, results. As economic reports took central stage, investors were caught off guard not only by U.S. data, but also by figures emerging from the Eurozone. A decrease in business activity in the U.S. indicated its vulnerability to the relatively high interest rates set by the Federal Reserve. Conversely, business activity indicators in the Eurozone exceeded expectations, casting some doubt on whether the European Central Bank will indeed start cutting rates in June. And this time, the divergence in statistics between the United States and the Eurozone has played into the hands of the euro. Additionally, Bundesbank President Joachim Nagel expressed doubts about the sustained decline in inflation, which European currency traders interpreted as a hawkish remarks. Following yesterday's unexpectedly strong data, The euro moved into a higher trading range between 1.0660 and 1.0710 against the yen. During Wednesday's trading, the currency pair continued to consolidate within this range. Despite the euro's momentary ascent, the US dollar remains dominant, cautiously exerting pressure on its currency basket peers. The euro briefly touched the upper boundary of the 1.06 to 1.07 range, but almost immediately faced an influx of short positions, leading to a rapid sell-off. For a bullish scenario to be confirmed, the euro needs to stabilize above 1.07 by the close of the trading day. If not, we may see a return to the current trading amplitude. When discussing market volatility, Brent crude oil stands out as today's leader. Prices began a sharp ascent during Tuesday's American trading session and eventually closed above the $88 mark. Currently, there is a partial recovery in prices from last week's decline, and this could be the beginning of a gradual increase in the buying volumes. However, it's premature to speak of any radical shifts in the Brent quotes. Oil continues to respond to the flow of news, shaping its trading strategies accordingly. From a technical viewpoint, to reinforce long positions, the price needs to stabilize above the level of $90 per barrel. Otherwise, the price may reverse toward the week's local low around $86 per barrel. Meanwhile, gold has once again found a foundation for growth. As of Wednesday's morning, it had declined by over 4%, falling to $2,318 per 3 ounce. However, the allure of the precious metal as a safe haven is hard to overstate. Consequently, today gold is back in favor, trading within a bullish range of $2,324 to $2,344 per 3 ounce. That wraps up today's trading on the global markets. Tune into InstaForex TV for essential trading insights. Should you have any questions or comments, feel free to leave them below. Our experts will answer you. So see you online tomorrow.